What up, Snake Gang? It's your boy, Fanilakhe Mamba, in the building, man. Don't mess with me, man. What's up, Doc?
What's up? What's up, guys? It's your man. It's your man, Tramayne.
This guy is messing with me, guys. This guy is messing with me now. You can't do that, man.
I'm separating the boys from the men, guys.
You're like chilling the big boys, man. We are the big boys. Other men are like fathers and all those people who are chilling at home. We are big boys, man. You know.
I respect the big boys. You
know. So, guys, today we're gonna be talking about the forex strategy that really changed my life, man. So I'm just gonna talk about it, and I'm just gonna talk maybe just a little bit about it, and then Tramayne is gonna take over and talk about it, and then we're gonna just keep on switching. But then, guys, just to give you a startup as to what changed my life. So I was a trader back in the days, but I really didn't know what market structure was. So until I dived into deep detail into understanding market structure, I was able to separate a higher time frame structure from smaller time frame structure. I was able to separate the pullback and the actual move, because many traders, they can take pullback as the actual move, and then now what happens to them, they are caught on the wrong side of the market because it's just a pullback, it's not an actual move. Market eventually will gonna continue the overall direction. So what changed the way I look at the market was me mastering the craft of understanding market structure, micro and macro market structure. So those are just like complicated terms, but I can just say major and small time frame market structure, guys. It helped me so much to see where am I looking to enter my trades, where am I looking to exit my trade. But I'm just gonna hand over to my doctor here, Tramayne, and tell you about his entries as to how did it change the way he looked at the market.
Yeah, guys, so I guess going off what Mamba is talking about, like his market structure and all of those things, I guess entries are also just a part of, or like the end part of, first of all, learning how to identify market structure and all of those things. So I think the biggest thing that changed my trading was realizing that entries is not it's part of a process. It's part of a process. Like if I skip this, I'll never be able to get to the part of now me doing entries. So same thing that Mamba is talking about, being able to isolate higher time frame structure and smaller time frame structure, all those types of things, I guess, led me to the point, or to the area where I'm now refining entries and stuff like that. So basically, to come down to refining entries, all I'm trying to do, guys, and this is simple as simple. All I'm trying to do, guys, is that I want to trade higher time frame structure. Doesn't matter what time frame I'm executing on, doesn't matter. Point is that where I'm executing, the area that I'm executing is always going to be a higher time frame level of structure, because I know that even if maybe my market on a lower time frame reacts from that area, but maybe it's just a small reaction and market is gonna break that area anyway, because I'm entering on a much smaller time frame at a higher time frame point of interest, I might be able to manage this trade in a way that maybe might give me a much more reduced risk, or maybe I might exit the trade even with something on the table. So what I'm trying to do, or what we're doing here, is basically, like we're saying, observing the structure and identifying higher time frame structure versus smaller time frame structure. All we're doing is we're using the time frames to our advantage. Guys, have you heard about people trading time frames? We do it here at the Chasers, guys. We use the element of basically different time frames to allow us to find better probability trading opportunities.
Yeah, guys, that was powerful, guys. But now, guys, I have a question for Tramayne, guys, because now he's talking about entries and all that, and I've been with this guy for the longest time you can ever know. We've worked together for so long.
I'm so now with this guy.
I've seen the way he trades before and the way he trades now. It's so fucking different, guys. So yeah, guys. So as I was saying, guys, the way Tramayne used to trade before and the way he is trading now, it's so freaking different, guys. So different. Now he's busy catching sniper entries. He's having a stop loss of 2 pips, 3 pips. I don't know what he's doing, but whatever he's doing is working out for him. So I want to ask him a question. How did the transaction help him view the market in a different way in terms of in terms of entries? Because one thing I know is that when he started trading, he wasn't focusing on sniper entries. I always say this: focus on getting those entries. But then once you master getting those normal entries, like risk reduced entries and what, then now you can dive in more deeper into getting those sniper entries. That's what Tramayne did. He was like good with catching those risk entries, high risk entries or low risk entries, like having a stop loss of like 20-30 pips or whatsoever, but he was like swing trading. But now he's catching a very entries with very tight stop losses, like 5 pips at most, I guess. Yeah, so I'm asking him, how did he go about that transaction? How did he move from that, like from having 30 pip stop loss to having like 10 pip stop loss?
So the main catalyst, guys, unfortunately, maybe not all of you guys will have the same catalyst, but the main catalyst in between me transitioning, like the thing that forced me to actually transition, was obviously my job. Now I have to send signals. And obviously, for me as a swing trader, the frequency at which I would send signals, maybe I would send like 1 in a week and maybe skip 2 weeks and then send like 3 or 4 in that week or whatever. But it was very inconsistent and we needed to be more consistent. So that was kind of the main driving force for me to move away from the higher time frames and scale down onto the lower time frames. But basically, guys, I guess the thing, my main transition, my main transition, I apologize there, I got a little bit sidetracked, but my main transition between me taking normal entries and obviously refining my process was me just realizing that, you know what, guys, if market is gonna sell, market is gonna sell. Doesn't matter whether you enter on a 1 minute, on a 20-minute time frame, on a 6 daily time frame, whatever time frame you can think about. If market is going to sell, it's going to sell. Market is always giving anyone an opportunity to make a decision that could potentially either make them money or maybe lose them money, whatever the case is. So how I made that transition was obviously, first of all, getting comfortable with the pairs that I'm trading, understanding which entries do work for me, which entries don't work for me, because then that helped me, like now that I'm dropping down on the time frames, you know that when we drop down time frames, we sacrifice the validity of higher time frames for some detail on those lower time frames. We get a lot of noise on the lower time frames. So it's very much possible to be right in the direction, but wrong on the time of entry. So that's kind of what I would say maybe I had to work through, is figuring out on the pairs that I'm trading, what's the right time to enter? What entries should I be focusing on? Risk entries or reduced risk entries? And basically once I got comfortable with that part of my process, I then knew that when I scale down on my time frames, these are now areas that I can use to execute on a lower time frame. If it's not in this area or if it's in another area, probabilities that I'll be able to find a trade that I can execute on a lower time frame, that I might be able to still maybe turn into a day trade or whatever the case is, probabilities of finding that are low. So what I then done was, I guess trading higher time frames gifted me the point of understanding why higher time frame structures are very important, and me refining down my entries on the lower time frames is me just sticking to always trading at higher time frame levels of structure. And that's basically my transition, man.
Wow, that was powerful, guys. That was powerful.
A lot of talking, man.
Yeah,
there was a lot of talking.
There's a lot. There's a lot. I was even thinking of my cats that I left under the bed today. Yeah. But guys, to keep things as short and simple as we possibly can, the way that me and Tramayne got to be like changed in terms of how we trade and how trading the way we trade today changed our life was being able to master the craft of market structure. So that is the first task for one, to like be able to analyze market structure, be able to differentiate the micro and the macro structure. And then the second thing was be able to point out your key or your most important zones. Once you are able to identify your zones as to where is your point of interest, where do you want to enter your position, where do you want to exit your position, so now you have a clean direction as to where, from higher time frame perspective, obviously he is talking about this, not talking about identifying zones on 1 minute time frame. Obviously those zones that are there are almost now refined, but it's not like he just went and identified them on like 1 minute time frame. So he refined his zones, or we refined, because we trade more like of the same way. Yes,
very similar.
We refine, we enter, we draw our zones on bigger time frame, like yours daily, your weekly, your H4 time frame. But then we go to our 15-minute time frame, 5-minute time frame, 1 minute time frame to do what? To refine those entries. Because remember, what happens on bigger time frame start from from smaller time frame. When a volcano starts, it doesn't just start to be like a bomb. It starts small and then grows. So we're trying to catch that move when it's still starting. So there can be a lot of momentum there. There can be a lot of stop out in that position because even your stop losses are very tight, 2 pips, 3 pips. But then that one trade that you can get, I assure you, I've made like 8% in one day. I've caught trade whereby I'm getting 8% in one day on yesterday. Like I think it was yesterday. I got like 8% in one trade. So it's like you take maybe 2 trades, okay, 1% down, 2% down, but that one position that goes in your direction, it just gives you tons of percentage. So that is our advantage in terms of how we trade and how it changed the way we look at the market. Because in terms of our risk, we are very much secured with our risk, guys. Because now we're having very tight stop losses, which if I can take losses, I won't even feel much of pain because my risk is very tight. But I'm using huge lot size because I know that the pips that I'm risking, maybe 5 pips is gonna take not so much of my account, you understand? So it really changed. Just go and try it at home and then
I think I would also say, now that at least he's touching on some risk management there, I think here at the Chasers we obviously place a big importance on like risk management and preserving capital, those types of things. And I guess one thing that we do here at the Chasers is that we understand what is in our control and what's not in our control. How often we'll get entries is not in our control. How often we'll hit TP, how often we'll hit stop loss, whether market will come to a point of interest, whether our structures, all of those things are not in our control. But what is in our control is how we manage risk. And so that part has now become, it's like, you can think about it like you can find an edge in a lot of different other ways. And now how we manage risk has now become part of our edge because we understand that the numbers that we are using there, those numbers are up to us. What the market is going to do is not up to us. So we kind of, in a way, are controlling the elements that we are able to control, which is how we're going to manage risk. And obviously, we're managing risk according to how our entry style has changed. And so all of those elements coming together produces an overall net profitable strategy. That's kind of what I just wanted to add. That guys, we control exactly the elements that are in our control. What's not in our control, then we leave that up to the markets, man. We very healthy, psychologically minded people.
You get it. If you
don't get it, guys, hopefully you'll come to the Chasers and we'll explain. We'll use different English for you. But if you guys get it, that we control the elements that are within our control, what's not in our control, guys, we don't cry over what's not in our control. If you guys get that, we're safe. We're safe.
Guys, make sure that you like, you subscribe, you drop a comment. Talk about Tramayne's outfit. How does it look today? It looks good.
Tell me that I'm looking sexy.
Come on, man. Stop tripping, bro. yeah, guys. Don't forget to subscribe and like and drop a comment. And also, don't forget to click on the notification bell. Notifications, so that when we drop a new video, you become the first person to see it. So, guys, we out of the building. Let there be peace in the Middle East.
Let our brothers and sisters be safe.